So the big question is this: how do investors like us who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings in retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer.
Hey guys, this is John. Welcome to the Stock Market Series podcast. Hope you're having just a phenomenal day. It's been a little bit of time. I've been working, setting up the fund and all. And man, it has just been really interesting. This is my third or fourth month now. I think third month, maybe edging on four, of like full polyphasic, and I've been transitioning away from carbs into keto, and it's just, it's been really nice. So I apologize for not posting very much, but I've just, I've been trading a lot and just relaxing and mostly just waiting for trades and all, and trying to focus on that. I got bored because I would mostly do my trades at night, and so I had nothing to do during the day and all. And so I tried to get this sales job, and then what I realized, I was selling like Cutco knives, or I guess so I had a couple appointments, and you sell some knives and all, and what I realized is I had this one appointment Sunday at 5, and I talked to the person, maybe sell a couple $100 worth of knives or something, and you get the commissions, they kind of scale, so there's not like a set commission because it kind of changes, but I don't know, you get maybe $50 or something from it, I don't know. And then there's base pay and all. I'm not going to go too much into explaining that, but anyway, I come back to the market and all afterwards, and I realized the setup I had been waiting 4 days for, holy crap, it just set up perfectly, because a lot of stuff will on Sunday at 5 or 5:30, and I totally freaking missed it because I was on the phone with someone, or I was doing this presentation and all, and oh my god, I remember the first time I made and lost 6 figures real quick was when there was the whole crypto explosion in 3 years ago, and the reason why I didn't do well is because I lost focus into it, and I for 2 or 3 weeks, which was an extremely long time, back then when everything was moving so quickly. I decided to focus on importing and exporting bulk graphics cards for mining instead of just trading, which is what I was great at. And because I lost focus, it cost me 6 figures really early on in my career. And so, and I got a whole story on that, I think earlier in the podcast, and if not, it's on YouTube. And I can go deeper into that, but that's not what I want to talk about today. To make a long story short, I basically realized that it's just me doing anything but trading is just stupid use of my time, because the results from that trade would have been, it's not even fair to compare. I wanted to get good experience identifying needs to help me with closing hedge fund clients and all, and so I'm glad that I did it to get that experience and all, it's stupid. If you look at the numbers, me doing anything but trading versus trading, it makes no sense. So I kind of am a little bit proud of myself because I caught on to that early, and I'm going to stop it and just focus on what really matters, which is trading. And that's something I would have had a lot of trouble doing 3 or 4 years ago. It's you're making money with this, and it's solid money, but it's not it's just not trading, and it's why would I do anything but it just doesn't make sense. So anyway, with that brief introduction aside, I want to talk to you guys today about something I think is incredibly interesting, and it's I've taken this behavioral economics course, and the teacher just says something that is so interesting. We're doing everything online, so it's like a video and all. And she says the difference between something that's random or a pattern is whether or not it gives you information. And to kind of put this in context, I'm going to play just a brief little snippet of what she just said in lecture. Not that, but here.
So randomness, think about a random walk, what we call the stock market. So like you can't predict whether a stock's going up or down based on what it's done before. So stocks are always a random walk, right? People like to think that they can, or they like to find patterns in stocks.
Okay, sorry if that was fast. I forgot I had it on 2 times speed. But basically what you said is, you can't predict whether a stock is going to go up or down. And, I think of the, plethora of hedge fund managers that have consistently outperformed the market for decades and, created billions of dollars in value, if not trillions. And it's like blatantly obvious that is completely false, because if it was, then the market would be efficient and nobody would have any edge trading, which is obviously not true. Ooh. And it made me really think about what randomness is, because if you look at like a lot of the setups that are 9 to noon, or just any of the techniques that anyone uses to trade and all, like a lot of it comes from taking abstract information and then transforming it into concrete protocols or concrete strategies or methods. And I remember I was talking with I have this one professor. He is amazing. He's like, his name's Vlad. His name it's like Kolonoskov. It's kind of hard to pronounce. Starts with a K and all. One of like the extremely famous cryptography expert. He worked on one of the new proposed solutions to replace SHA and AES. Incredible, very amazing. And he just has his stuff in index funds. He's he's kind of his professors. You just work in, no big deal. And I remember I was in his class last year, and also I was talking to him recently, and I think there was this one week I made like 15 or some odd grand, and there was also this project I did on decentralized order books for global financial markets. And so I'm kind of explaining to him some of these like finance concepts and all. And he's like, well, how do you like, because I also recently just like started putting together the hedge fund and all. And so, he asked me, to kind of explain how like I trade and my strategies and all. And I'm like, well, I do have this book that like explains everything, but let me showcase this one strategy. And at the time I was doing that trade on KEM, and so that was a whole head and shoulders thing with puts. So I showed him that and explained the head and shoulders setup and all. And he's like, okay, so what's it based on? And like a decent chunk of it's like psychology and all. So you have like a higher high, then a higher high, and then you have a lower low, or then a lower high, or however you want to describe the head and shoulders setup. And so I'm trying to explain to him like this and like psychology and all. And he like kind of gets it, and he's like, okay, cool. Well, I guess we'll talk about this more. I'd like to see how this works out. And so fast forward 4 months, and he kind of got freaked out by the huge drop, and also he sold a lot, of his assets in July. I think he said Dow 26 or something when he sold, something like that. I don't know. It was interesting, but hopefully he'll do well. And anyway, so we're talking recently, and again he's trying to have me kind of explain my strategies, and I'm like, well, I mean, you just kind of trade like every day for 4 or 5 years, and then you kind of get a feel for it and all. And it's really interesting because I was listening to I think it was Hedge Fund Market Wizards or something, and this guy, he's profiling, you're probably familiar with it, profiling like really big hedge fund managers. And like with everyone, every single person there, it was always, except for some of the really like super heavy quant guys who were just doing like trillions of simulations. For everyone else though, it's like the strategies they use, they're very ingrained in who they are, and you can't just like, there was this one guy in particular that really stood out to me. I think he dropped out with like 3 classes left in college, went to the Cayman Islands or somewhere, started up what eventually became, I think, a $700 million fund. And he's trying to, he has like students that he would kind of mentor. And what he realized is like he couldn't really teach like specifically exactly what he did. He could only teach them how to trade and then have them develop their own style, because everyone is going to end up different, because there's always different ways that different people interpret randomness and data in the market and turn that into processable patterns. And the cool thing is you can start out with a really solid baseline by just following the patterns that pretty much everyone else is following, and then you develop that and you specialize it into the strategies that you're using. A really great example of this is like with the stock market, when you're implementing W's, it's pretty much like straightforward. You just buy at the initial W level, and that's basically it. You just use Bollinger Bands, and as long as it's like towards the bottom of the Bollinger Bands, like you're gonna be good. But when I started transitioning that into Forex, like what I realized real quick after making some real bad investments on 1000x leverage is that doesn't work in Forex. And instead, what you need to look for are not Bollinger Bands, but actually moving average convergence and deviation from them using alligators. And then also you need to 100% have a very, very solid hammer bottom or some kind of equivalent to a hammer, and there's a couple of those that you can kind of trade in FX and all, because it's much more technical, much less emotional, so you're not going to get bounces off swings, you're not going to get bounces off, at least, what I've seen is that there's not going to be really those bounces off of deviation bands, but instead it's going to be based a lot more on just hardcore price action, which means hammer candles or anything with big wicks or the equivalent in candles that are next to each other. And I just really found it interesting that there are so many different ways to interpret the information in the markets. And there was this one dude, he created I think a couple $100 million fund. And all he's doing is making algos based off of open, high, low, close, historic price data, and I think that's amazing. It's crazy, awesome, and I guess that's kind of what most indicators are. But it's just so interesting to see it applied because because people are like, it's random, and to an extent, if it's gonna go up or down in the next 3 seconds, okay, maybe that's random. But at the end of the day, what you can, effectively trade and map probabilities to outcomes and really identify patterns. The only difference between random deviation and, $1 million pattern is whether or not you can find information in it and turn it into reality. So really big message for today is to look for those patterns and understand that, a lot of stuff is already out there and it is really solid. So find the stuff that works and then, model that. And then be willing to adapt it and understand that, markets are different. Things are flexible. One huge thing is trying to trade, everything like it's different. Like at the end of the day, technical analysis, it's TA no matter what market you're in. There's like slight little deviations of it, just like there's, different accents of English or different accents of German or Spanish or whatever. But it's all fundamentally the same language. And so once you master that, it's a whole different playing field. And really just the best way to really have consistent understanding of the markets and also just, predictions of price action and such. So, really cool little thing I got here from this behavioral econ class, and a couple cool lessons on staying focused. And also, if you guys got a ton of value from today's podcast, go out there, apply it, absolutely crush it. And see you guys in the next one. Thanks. Bye.
Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses it took me years to uncover completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% per trade daily.